Okay, good morning again, everybody. My name is Lynn Warren, and I'm a senior consultant at FMT Consultants. And this morning we are going to talk about GP year-end close. There is a file that goes along with this session. It's a PDF with this year's version of our closing guide, also available to download. And we're going to be following that along. You will notice when you look at that file that actually the first half of the file is about month-end procedures. That's for your reference. We won't be going through those today, so we'll be jumping kind of from the very beginning to about page 44 in the PDF. If you have questions about month-end procedures, the final slide will be the contact information for our customer care department, and you're welcome to get a hold of them if you have some additional questions about those procedures. So, get my slides out of the way here. The very beginning of the close guide talks about preparation and backup. And anytime you're doing any sort of procedure in GP, if you are following instructions from somewhere, they're going to tell you to take a backup. This is one of those times when they really, really mean it. The close process can be fairly processor intensive, both on the SQL side and if you're doing it from a separate workstation from that side as well. If something happens, if GP crashes, there's no redo. You're going to want to restore from backup and start over. That's why you want users out of the system if at all possible. Backups run. Microsoft suggests actually a backup before each module close, and that's so you don't have to start over from the beginning. And so we show you, and I'm going to drag this over so you can see what I'm talking about. We do include instructions for running a backup from inside GP. And the caveat to this is that you must be using the install of GP on the SQL server. Not everyone even has GP installed on the SQL server anymore. So you cannot do this from your workstation. You'll just get an error that you're not on the SQL server. This form of backup is fine in an emergency if you have access to the right place. But this may be something you need to coordinate with your IT department if you don't have SQL access of your own. I really prefer a SQL backup done out of SQL Server, and I'm going to show you what that looks like, even though you may have no access yourself to SQL. You may not be that person with that responsibility in your organization. Just going to show you quickly what it looks like. Your IT department should know exactly what you're talking about when you're saying, an actual SQL backup from the SQL server. But if you end up being the one who has to do this, it's really, you do this from the SQL graphic interface. It's a right click and backup. You choose a location and a file name. You say OK. It backs up. And what you get when you do a backup is every single table, trigger, stored procedure, programmatic add-on to your database. You do both the Dynamics database, which is your system database, and then any company that you're going to be closing. If you have test companies, not really critical to close those, not critical to back those up. But anything that you're going to be closing in production, go ahead and get a backup of those as well. Know where your backups are so you can restore from them. And so this is why we recommend, for multiple reasons, not having users in the system while you're closing. If you had a failure and you had to restore from backup, you're going to lose any work that other users did in the meantime. So if you've been closing for 45 minutes and somebody's been entering invoices, they're going to lose. That's all going to have. You're going to go back in time, so that's not going to have happened. They're going to have to re-enter all those transactions. So once you know you have those, there's not much that can go terribly wrong, and that's why we recommend that you do the backup process between every module that you're going to close. And if you have more questions about how to do that, or if your IT department has some questions about that, I can help, and customer care can help with all that. So, switching back to, actually I'm going to switch back to our instructions here. Yeah, and this is the other, only the SA login can do this, so you have to be on the SQL Server and you have to be logged in as SA. So there's a section here on recommended SQL maintenance. This is really the sort of thing that you want to schedule before you sit down to start closing, like the night before, the weekend before, so that you you have a relatively tidy set of databases. If you have a very high volume of transactions, you kind of want to give yourself every opportunity to not have a problem during that close, so you don't have to roll back and do it again. There's a section here on checklists. This is probably the last year that section will show up in this manual because they don't really do anything anymore. However, there are checklists for closing each module, sort of an abbreviated version. If you're able, can you mute your phone? Because we've got some background noise here. There's a list of checklists on Customer Source that's sort of an abbreviated version of this guide that does also walk you through, the things that you need to make sure you've done before you start to close. And if you do not have Customer Source access, then let our Customer Care Department know, because they have administrative rights to set that up for you. That's where you access the knowledge base for GP, as well as training materials, supplemental instructions, manuals, and that sort of thing. So we're going to skip past the checklists, and we're going to talk a second about creating the periods for the following year. Now, you've probably already done that before you reach the close point. Hopefully all of you have already created 2013, but a reminder, because this is one of those things you only do it once a year, and you forget what the steps are. The trick, actually, when you go into this fiscal periods window, and let's say I'm at my last year that's created in my test company, which is 2018, and I'm like, well, but I need a 2019. How does that happen? It doesn't really look like it. You can type in this window. So you type in 2019. It automatically calculates a month to period. If your periods are different, then you may need to adjust this a little bit. It calculates the year for you. You do have to click the calculate button. It's going to fill in those. You can go ahead and do your descriptions here if you actually call these months or you call them something else. You have the choice, maybe I'm creating 2019. I don't want anyone to use it yet, so I'm going to close them all in the sense that they may not be used, not that they are closed. I'm going to say OK, and now I've created my 2019 year. I did have someone, I always get a couple of calls every year. Someone was in that window and had a little 10-key mishap and accidentally created the year 3019. You can't undo that. There's no delete. You're just going to have a crazy crazy year way in the future. Of course, you want to close those periods, but that's why I advocate triple checking the year that you have typed in the window before you hit that calculate button. You're not committed until you hit calculate. So we have here, someone's got a clinking noise in the background. If you're able to mute your phone, would you do that for us? We have a recommended list for module close, and this actually is sort of you get sort of the group all other modules list that includes GL. There are a few. Yeah, I'm sorry. If there's someone chewing into the phone, could you mute your phone, please? This all other modules is the catch-all, and this, while this is the recommended order because they sort of flow through one to the other, there are occasions where you would not necessarily do this. Some people close inventory on their own specific schedule, and it's not. You may have your own. I'm not saying that you're doing it wrong if you don't do it this way. This is sort of the out-of-the-box standard order that you are going to close your modules. You do want to close GL last. So that whatever it is that you are closing, GL should be the last thing. Everything else flows through to the GL, and then you close that last. So this is where we're going to skip over the month and period end, and at least in my PDF, 44 is where we start the year-end closing procedures. There's a checklist at the top of each chapter, and you can print these out. I think most people do when they close every year. They print this manual out. They pull out only the sections that they're going to need to do their close, and then they run through these checklists. All of them start with post all transactions for the year. Obviously, don't close until you're done posting transactions. It is possible to post back into the most recently closed year. You cannot post back farther than that. So if you have a weird audit period, if you have something going on like this week, it's entirely possible that you might need to post something into 2011. Don't close 12. Because you can only go back into 12 once 12 is closed. And 11, in order to reopen that, we actually have to get with Microsoft. They get in and they have a series of these huge scripts that they run to reopen a closed year. Their time is fairly expensive. It can be a prolonged ordeal if you have a very, very large GL. So it's something to avoid if you can, having to reopen a historically closed year. But once you've closed 2012, and that is the most recent closed year that you have, you can post back into it. It is going to change your numbers. It does that automatically. However, if you post something back into December, it's going to adjust your balances coming forward into 2013. And that's a setting in, like, for example, your GL settings. You can turn off posting to the closed year. And I recommend turning off posting to the closed year and only turning it on when someone actually needs to do it and is allowed to do it. And that's this posting to history box right here under General Ledger Setup. That's really the sort of thing you want to leave off and only turn on when you need it. For inventory, of course, they recommend that you complete a physical inventory count and post any adjustments. There is, in fact, down, I think it's just a couple of pages down. Is it in here? Actually, I think it might be in the monthly section, on doing a cycle count, on how to set up. And if you are unfamiliar with doing that, it's not completely obvious from looking at the inventory module. So the steps for creating a cycle count and implementing it are in here. You do want to do that pretty close to close if you can. And I know that many of my customers with actual physical inventory are usually scheduling they're scheduling a full inventory like right around the very end of the very beginning of the year, and then immediately closing inventory after that. The print additional reports, not a great specific piece of advice. My advice is print the reports that you use on a regular basis. If you're printing reports that you don't ever use, the chances that you're going to find a problem are pretty slim. So print the reports that you use on a regular basis, your historical inventories, stock, trial balance, whatever reports that you're going to confirm before and after your close, basically, that everything happened that you expected to happen. Also, many of my customers file these reports for several years, just for whatever reason, if they need to go back and look historically. Make a backup, and that's where you're going to have someone go into SQL and kick off those backups for you. And then you're going to close the year. And so we're going to scroll down. They do actually have a recommended list of the inventory reports that you're going to print. And where this says historical stock status, depending on what version of GP you're on, it is no longer the historical stock status, it is the historical inventory trial balance. And if you're using serial and or lot tracking, go ahead and print those lists as well. You do your backup, and then the close itself is in every module kind of anticlimactic. Once you actually get to that window, you are it's under routines for each module. You go to the year-end close windows, and you get some options, at least GP10 and 2010, about what you're going to remove when you close. Some people don't ever do this, and that's fine if you don't. Some people do this on their own time, not necessarily at the end of the year. But if you want discontinued items, they're going to be removed from your inventory, tick the box. Not everyone's going to want to do that. Your sold lot attributes, that too I think is one of those things that I would choose to do in my own time and not necessarily do as part of the close. You do get the option, you know, in 2010 I don't think you get this detailed or in 10 you don't get this detailed in the option, but your sold receipts and your cost change history, at some point those tables get enormous. So there may be a point where, you know, you've got to get rid of some of your old cost change history. Maybe you decide that you want to keep 2 years, maybe you only want 2 months. You can set a cutoff date basically, and it's going to remove that history from before then. I do recommend doing that if you can stand to do so, because those tables really do get unwieldy. When you do this update item standard cost, you know, the inventory card, the item card has a very simplistic standard costing on it. And it only changes under certain circumstances. If you want that updated, all of them updated at this time, you can tick that box. And I'll point out while I'm in this first window, every window in GP has a blue and white question mark in the corner. That opens the context sensitive help in GP. So any window that you are in, no matter what you are doing, if you hit that, you will get the help page for this window, which means that you're going to see exactly what's going on here. There's actually a section that defines the fields. If you're not sure what a sold lot attribute is, this is helpful. No, actually they do have an example. Remove all lot attributes for lot numbered items. For example, if red has been entered as the value for the lot attribute color, and you've sold all lot numbers items assigned to this color and value, that's a good point. It's not going to remove data that's in use. It will be removed because the quantity received is equal to the quantity that's been sold. So if you don't have any of this inventory, the red inventory left in stock, it's going to remove red as a lot attribute. Again, this is probably something you prefer to do in your own time rather than as part of your close. But so if you're ever curious about something on a field, you've always got this. Some third-party products are not quite as good about having a really great help window there, but all the windows in GP, if you need to know what's going on in this window, hit the help button and you'll be able to find out. So I'm not going to remove anything, but I'm going to update standard cost. And I will warn you before I do this first module close, I'm using the Fabricam company, which means the data is a little weird. It's also in the future. You'll see that I'm going to try to close 2014 in my Fabricam data, and I have set my date to 12/31/2014. It's not critical to do so, even if you are, you know, if you're into January, as most of us are when we close. We see closes all the time. People left their regular system date. Really, as long as it's after the last day of the year, it's fine. But those of us who've been doing this for a really long time, you used to, like, you'd get into trouble if you didn't change the date to the last day of the year. I do it superstitiously. It's never hurt me to do that. So if you want to change your system date, all you have to do is click and say, you know, I want it to be the last day of the year. And there's my close window back. So I'm going to process, and Fabricam doesn't have a ton of inventory, so this doesn't take very long. Most of these don't take very long unless you really do have a significant number of records. I have seen a GL close that takes hours. I've seen inventory closes that take hours because of the cleanup and updating that's happening in the background when you actually close. It's not, there's not a formula that says if you have X thousand rows, it's going to take X minutes, but if you do have a very long, can everybody mute your phone, please? Okay. So I've run the process and nothing has come up on the screen. I have no idea what's going on. I haven't gotten a report. I'm going to go to my process monitor, and I did that from the Microsoft Dynamics GP menu. Go to process monitor. If anything was still running, you would see it here. And like most modules, inventory doesn't tell you anything when you're done. I go in to, tells me absolutely nothing. Really, you've closed, you want to go and run your reports afterwards. And could I get everyone to mute your phones if possible? We're getting a lot of background noise. Once you've gone through that close, and there's some more definitions in your manual about what you're removing if you do choose to remove some of those items. So the warning you get here is that while the year-end closing is in process, you won't be able to post transactions or batches, reconcile, change valuation methods, change decimal places. If you attempt to begin one of these procedures, an alert message will appear warning you that you must wait until the year-end closing process has been completed. Yeah, during close is a terrible time to do any of that. That's why we prefer that no other users are in the system while you're closing. But in this case, it will actually give you a warning if you tried accidentally. And then they recommend making a backup when you're done. So when you close inventory, your summary data, your inventory summary data moves to history, so that it's historical summarized data. That cleans up the summary tables. The beginning quantity of each item is updated to be the on-hand quantity at each site. That's why you want to do that. That inventory, that cycle count, really as close to close as possible, because you want your on-hand quantities to be as accurate as possible. Obviously, at any point you can go in later and do an adjustment or a variance, but that's if you're doing a physical inventory, do the close as quickly as possible afterwards before anything happens that starts to skew your numbers. And this sort of it's in your prep, but if you have a large inventory and you're getting ready to close inventory, you're about to do a big cycle count, schedule ahead of time, like the previous weekend, to have a full inventory reconcile run. That also trues up your tables to the best of GP's ability based on movement, receipts, sales, adjustments, so that you're starting with a fairly clean slate in your inventory tables. If you're familiar with inventory, then you know that you're constantly reconciling. So it's good to schedule one before you close, before you count. So quantity sold, which is just a summary field, for each item is reset to 0. It really is just, I can't even think, there's not even a lot of reports that use that field. It's just something you see on the card. And so depending on what you ask to be removed, those things have been removed. This is the removal of discontinued item that we're talking about. If you're going to do that, read through this a couple of times. There's suggestions about the reports that you should print before and after. But then once you've completed that task, you can run your reports again afterwards just to check your before and after, make sure you saw the movement that you expected to see. And then inventory is closed. And we move on to receivables. So when you close receivables, there's no real hitch to this. You do want to make sure that, like in all modules, you're done posting to the best of your ability. I know receivables, you're not necessarily ever done, and you have to declare a cutoff point at some point. But you do want to avoid posting back into that year as much as you can. Make a backup. And then in this case, for both payables and receivables, you'll see the point made that you should close the calendar year and close the fiscal year if applicable. You will always at the year end close, well, mostly at the end of the year, close the calendar year. If your fiscal year is different, then you'll be closing that at a different time. But if your fiscal year is also a 12/31, then you're going to do both at the same time, and there is in fact an all option for doing that. So you don't have to close twice if everything closes at the end of the year for you. And so let's open up that receivables year end closing window. And you'll see, if you've ever closed before, you'll actually see the dates of your last close in this window. This is also how you confirm when you're done that everything closed. So if you are having to close these separately, if you're only doing your calendar close, you would select calendar. If you're closing everything, you could say all, and that's fine. You have an option to not print the report, just like inventory didn't print the report. If you have high volume receivables, lots of customers, I did a close yesterday. The final report was 963 pages. We printed it to PDF. We know that nobody will ever look at it. If you know that you're going to be, putting out a report so large that like nobody's going to be able to manage it, untick your print report to avoid that. And I would say before your close, each close, check your print setup. I do not recommend printing any of your close reports when you have the option directly to the printer because, again, 967 pages. I would actually suggest as you're closing to go ahead and switch to a PDF printer if you have that option, so that you're not sending an absolutely enormous paper print job out. You can always print the PDF later or selections of it if you choose, but some of these reports are just too unwieldy to send to a printer. So I'm going to close everything because my fiscal and calendar years close at the same time. I'm going to select print report and click process. Am I absolutely sure? Yes, I am. And here's where I'll just print this to the screen first. And yeah, this is a fairly small set of customers and transactions in Fabricam, and the result is still 35 pages. But what you get in your output really is you get summary for every customer, for every aspect of that customer. It's definitely something that you may want to look through as a PDF and not necessarily something you want to print to the printer. And you'll see, for example, in my data that this is the first year that I have closed in Fabricam, so there is no last year. In almost every module, the year-to-date and life-to-date, those are summary tables that are calculated either on the fly or by running Reconcile. And so if I opened the Aaron Fitz customer card, I don't believe I'm going to see year to date on that main card. It's all kept in a table of its own. If you don't close, it's not a year. So I have a year-to-date now because I just closed 2014, but it's got years. It's got years open back to 2002, but because I've never closed, there is no last year. If you're coming into a situation where some people don't close AR, I don't know exactly why they don't, but they don't, and you may decide to close after maybe not having been closed. If you do that, then just remember that you have defined a year in kind of a strange way. Going forward, if you go year to year, then you'll get, actual years that are made out of years. But if it's the first time you've closed, then it may be a little strange the first time out. But it will true you up going forward. I'm closing now, so as I go into my 2015, the year-to-date calculations will be correct because we actually have a cutoff point where the year starts. And the second report we get, if you have salespeople in sales territories set up, that's a good question. Lee asked for a June 30 fiscal year end. Would we close the calendar year now and the fiscal year after our fiscal close, or wait until the fiscal year closes to close the last calendar year? Philosophically, that's up to you guys. If you're like that report that I just had open that had year-to-date numbers on it, that is based off the calendar year. So if for informational purposes you want your summary data to mean a calendar year, then you would close calendar now. And I can't think of anyone who doesn't do it that way. But if you want your year to start on July 1st from a summary data perspective, then you would do year and calendar in the summer at the same time. I think it's largely philosophical and it's not going to hurt anything. Though I think I might change my answer for payables because of 1099s. But for receivables, I think your calendar really could be anything that you want it to be. The second report that you got, if you have sales people in sales territory set up, is you'll get a sales summary. You may not be using commissions out of GP. You may be doing your own thing. And yeah, sales territory. So once you get your reports, that's if you want to make sure there's not another one coming, check your process monitor. So we're done. Receivables is closed. That does take significantly longer for a lot of receivables. So don't let me mislead you that it's super quick. So really, if you're doing calendar and fiscal separately, it's pretty much the same process except you tick the other radio button. Yeah, we'll talk about closing periods. A good step, particularly for payables and receivables, once you're done with your close, go ahead and go into your periods as your final step. And for example, if you've just closed, I think somebody's got an adding machine running in the background there. Can you mute your phone? So you don't necessarily want to do a close all because you need December open to complete your close, and you will get a message complaining at you that December isn't open, or your final period isn't open. But let's say I've just finished sales, and probably most of these had been closed already. Yeah, Roland asks, when you do a fiscal year close, a retained earnings account is affected. I'm assuming that when you do a calendar close, a retained earnings account is not affected. Is that correct? That is, in fact, pretty much the only difference between the two closes. So I've completed my receivables. I'm going to go ahead and close December for sales. I know I might need to reopen it next week when we, something else comes through. But this will stop anybody from not remembering what year it is and accidentally entering transactions for last January, for example. Just sort of a good housekeeping step to just close that final period when you're done with the module. So we move on to payables, and this is the one step, really the extra step here is that you're going to be looking at your 1099 data. This is the calendar year closing in payables does the summarization for 1099. And so pretty much for everyone for payables, regardless of when your fiscal year is, you will need to close your calendar year as of 12/31 so that you get 1099 totals. And it's like I was talking about the year-to-date column in receivables. That's one of the things that happens as part of the payables close. You're defining the year so that GP can calculate a year-to-date. And this makes a point. It's a subtle point. The amounts in the year-to-date column are updated when a payables transaction is posted, regardless of the posting date or transaction date. These amounts will be incorrect if transactions for the closed year are posted after the year has been closed. The next half of the sentence says, or if transactions for the new year are posted before the previous year has been closed, though you may re-summarize now, so you're not locked down to the kind of schedule that you used to be. It is a good idea to close your payables calendar real close, but not everybody can instantly, and you are able to re-summarize your 1099 data now. So, but you do end up in trouble if you have to post back into a historical year for a transaction that happens to be 1099. Because the year is closed and that year cutoff has been defined. So you may end up having to do a manual adjustment if that does happen, and I will show you in a second how you can make a change to some of these totals. But it is, don't close, if you can help it, don't close payables until you've made all your 1099 payments, but do get it closed as quickly as you reasonably can going forward. And so let's take a look at the 1099 sort of dialogue here. Can the person with the barking dog mute their phone, please? Let's see, So I want to make a distinction between a couple of windows here, and I just went to Tools. This one is a utility, Purchasing Update 1099 information. And then there's also Routines, Purchasing Print 1099. And then there is also in the Purchasing module, in the cards, there's a 1099 Details card. Each of these plays a different role, and one of these plays a potentially really destructive role if you don't realize what you're doing. Oh, okay, hang on just a second. All right, so you guys can't shout at me if you want to stop me for a question, but I do have my link window in the corner of my eye, so if you want to catch my attention with a question, just type in that box and I will see it within a couple of seconds. That way we're getting a little less noise in the background. Thanks, Jake. So this Update 1099 information window is let's say you realize at the end of the year that you really weirdly set a bunch of vendors to a capital gain distribution, even though they're just miscellaneous. And it was a bunch of them and you really need to change it, you would go here to do that. But this does mean, unless you lock this down, I mean, maybe it's only one vendor class, but if you don't make any sort of distinction here, what you are literally going to do is change everybody who's a dividend to a capital gains into a miscellaneous 7 non-employee compensation. Be absolutely sure this is what you want to do, and absolutely sure that you have a backup before you do this. I have had someone call me and they said, I thought I was doing something else, and I thought I was updating their totals, and so I chose all my miscellaneous non-employee compensation and I turned them all into something else entirely, and there is no undo. And unfortunately, we couldn't just switch it around and do it the other way, because there was a whole bunch of people who really were dividend tax types. Beware of this window is what I'm saying, and get a backup before you need to do this, and make absolutely sure that you need to do this before you run it. However, these other 2 windows are perfectly good for you. The 1099 details window, which you'll find under cards, you choose your vendor, and what you'll get when you look at this screen, you get a choice of the tax type. You can see month or year. And let's find somebody who's actually 1099 with 1099 payments for 2014. Oh, apparently I don't have any. Well, we're about to. So you'll see for each month or for the year, their totals, their 1099 totals, and in theory what you should see here would be the same, you know, as if you did a print run of 1099s. But maybe for whatever reason you have a separate system, someone got written a paper check, it's 1099, you need to include it in their totals. What you would think you could do is go into this card and change their yearly total, but you cannot. What you can do is go in through their months and make a change. In September, we wrote this person a paper check for $1,200, or it was printed out of another system. So I have now changed the amount for September to $1,200. If they also had a regular 1099 payment in August that came out of GP, then you would already see, like, you would already see it in here. What I have done is change the total for the year. I've increased the total for the year by $1,200. Increase the total for the year by $1,200. Did I not save that? I apparently did not. Okay. So now we see the $4,000 payment, the $1,200 payment, totaled for the year, broken out by month by month. You cannot adjust the final total. You can only change a month amount. If you're really just trying to register a payment that's not in GP, something that's not in GP, I say just put it in December, because that's the default month that shows up when you're flipping through these. This information goes nowhere else. It's just for their 1099s. So it doesn't matter, you know, if it happened over the course of the year. Maybe they got a check for $212 a month. If you just want to go in and put the total in December, you can do that. It's not going to affect anything else about this customer or this vendor. It's just going to be the total that prints on their 1099. So you can save that. and do that for whatever tax type you need to and whichever vendors that you need to. You could theoretically do that for multiple years if you had to, but you know, you're only going to get a yearly total when you print your 1099s. The actual print 1099 window, which again is under routines, tools, routines, purchasing, is your print 1099 window. And you want to make sure that your address is correct. If it is not correct, this comes from your company card, which is in Tools Setup Company. So, you know, if your zip code has changed or your phone numbers have changed, whatever, you can come in here and make your changes to your addresses, and those will be reflected in your 1099. You'll need your federal ID number. You're going to tell it what year you're printing, and you can only do one type at a time. The form type, this used to mean something back when you actually had continuous feed paper. I suppose it's probably still possible to buy continuous feed 1099 forms, but I haven't seen them lately. But really, a ream of paper in a paper feeder is continuous as far as your print selections are concerned. If for whatever reason you needed to stop, if you were manually feeding 1099 forms into the front tray of a printer, you might want to switch to single feed. It's going to give you a pause in between each one, but I strongly recommend the paper tray option if you have it. I did do some research earlier this year on the self-assembling forms, the 1099 forms that they print and then you seal them sides, and then you rip the sides off when you get it. As far as I know, there's no problem. I haven't had anyone specifically tell me they have or have not used those forms, but from everything I looked at, there shouldn't be a problem as long as your printer can handle them. You can do subsets of vendors if you want, and you may have your vendors classed out in certain ways, and it may just be that you may just want to start with vendor ID and break it down by name, or only do a couple to get started, just to make sure that everything's coming out okay. You do have the option. You can select alignment form, and what you're going to get is like a plain paper printout that shows you where every box on the 1099 would go. I guess you could print that on an actual 1099 form, but I wouldn't waste one. I would just print it on plain paper and then hold them up together to make sure that the box you think you're printing in is actually the box you're printing in. And a note, if you have modified your 1099 form so that your user security is pointed to a modified form, but you run the year-end update for GP that has a new 1099 because a box moved or whatever, your modified report will not change. So I've had people call me and they go, I don't even know what box this is printing into, and it's because someone had redesigned their form last year or the year before. You shouldn't really ever have to modify your 1099 form, but occasionally your printer is strange and you do have to nudge some stuff. So you do want to make sure that you print a couple for tests, just to make sure that what you're printing actually fits this year's IRS form. And then you print. I know a few people who print these to PDF and then print the PDF to the forms, and in theory that's fine. Every once in a while you hit a little print driver. You have to nudge your PDF basically to make it fit, just because of margins. But it's not a terrible idea. So you've made a backup. You've posted everything. You've dealt with your 1099s, and then you close at least the calendar year, if not both. And we're going to close both. And again, I'm going to choose print report, but you may not want to. I'm going to do everything, and I'm going to close year. And you'll see, like, as soon as I hit close year, it committed that date to the last close. And so now I get, and same sort of summary that we got for receivables, just sort of a summary of what happened over the year when I close this. And I think that's the only report that you get for payables. close that window. I'm going to check my process monitor just to make sure I didn't miss anything. And so my year is closed. And then there's actually the recommendation of closing the sales tax periods for the year, and not a whole lot of people actually use these, but I always do it anyway, just so that they are closed along with the other, with the rest of the close. And I don't even, actually, do you even do that anymore in 2010? I may have left something on there that doesn't have to be there anymore. For your 1099s. This is all, everything that I went through with these windows is in the manual, except I maybe didn't put the big strong warning in there about not using that modification, that mass modification tool, unless you really do intend to do that sort of modification. And once you've closed payables, for most people, and this is the fiscal steps, most people are ready to move on to GL at that point. Some people actually close AP and AR and then end up waiting another week or so before they close GL. That's all fine. You're not going to hurt anything if you do that. If you have fixed assets, you do want to close that before you close the GL. And you know, something I actually was doing a fixed assets close yesterday, and I was really just working with the technical folks and not necessarily the accounting folks, and so we came through these steps, and I was like, did depreciation already get run? And it did. They ran it on 12/31 on purpose, and I wasn't entirely sure if you know, if there was anything that we needed to do since that had happened, and I did a little research, and no. So if you're, you know, not ready to do all your closings, but you do want to go ahead and do your depreciation on the fixed assets module, you can do that before you close. Like, they don't have to happen simultaneously. And so this is one of those warnings. Once you close the fiscal year, you cannot print reports for the prior year. That doesn't mean, I mean, you can still see a certain amount of activity, but there are certain summary reports that you don't get. So there is a list, right? There's not a list, and I will get one and send out an update, because it did occur to me that there is not a list of FA reports to print. So the only other thing besides your depreciation and running your reports is to build your calendar for the next year before you close, and that is pretty straightforward. You're going to go into assets, you're going to go into setup, or you're going to go into utilities. You're going to go into utilities and build your calendar, and make sure I didn't miss a step there. Nope. So it's a little different from the 2010 window if you're familiar with 2010. For one thing, you used to not get this choice. That's the default, and that's $21.99 is what lots of people do. So there's no reason you can't. And synchronize quarters to fiscal years. Actually, I don't know that that's creates quarters in your years. I've never seen anyone ask any specific questions about that before. You can do an inquire, and it's just going to show you what it's going to do. Yeah. So this is my Fabricam issue. and that's because fixed assets is a little bit messed up in Fabricam. You'll go into your inquiry and check your year. So I'm closing 2014. It's really 2015 that I care about as well. Click verify. I may get the same key error, I don't know. Nope. Apparently leap year is still a problem. So really, if you step in and verify your calendar, you'll probably see that it already exists. You don't need to build it. It probably all got built in the first place. Every once in a while, as a troubleshooting step, you'll be asked to rebuild all your calendar years, but a verification of the year being closed and the year coming up will be enough for you to be sure that the calendar exists. As usual, make sure that you post anything that you want to post before you close. Do your depreciation, post that. Make sure you get it to the GL. Process year-to-date depreciation and print activity reports, which there's actually a couple of reports that you want to print out of fixed assets. There's an annual activity and the fixed assets to GL reconciliation that you definitely want to print and keep. You actually want to look at your fixed assets to general ledger reconciliation. You also, or at least most of the customers that I talk to, will also go through and do additions, retirements, and transfers for the previous the year that's being closed. So I'm doing additions. We're going to do active and retired in case anything was retired during the year. I'm just going to do a place and service date. 1214 for 12/31/214. And my Fabricam doesn't have anything in 2014. So you'll do that for additions, retirements, and transfers. And then the close, as long as you're closing all your books, you can actually do an all in the close window. For your own reasons, you may not want to do, you may want to pick and choose, you may want to do them one at a time. It is possible to do them all at once if you wish. And I am fairly certain this is not set up right. That's it, no output, just to close. So then we reach the big enchilada, we reach your general ledger closing, and like I said, I think in my experience from most of my customers, this doesn't necessarily happen until a couple of weeks after the year end. So what you get by closing the GL is that you get your balances summarized and brought forward. Your profit and loss goes to retained earnings. All your summary data is reset with the new definition of year. The profit and loss accounts are zeroed after they are closed to retained earnings. And we're going to talk about this for a second It's the big piece that I put a giant yellow highlight on. And that's when all your primary summarizations are cut off to restart for the year. And then this does mention that allow posting to history checkbox, which, like I said, you should leave unchecked most of the year. Turn it on when you actually need to use it, and then turn it off again when you're done. If you post back to the year that you just closed, the posting journal is going to look a little strange because you're actually going to see two sets of transactions, and one of those is the transaction actually occurring in the previous year, and the other is the balance brought forward changing as it comes forward, or the retained earnings account being updated coming forward. So like I said, if you post into the previous year, like your end reports are now different, and you will need to rerun them. So do all your period end procedures, post everything that you need to post, make sure that you are absolutely done posting into the previous closed year, because you're about to shut that off forever. We'll talk about, there's just a closed sales tax periods window. Use a smart list to verify the posting type of your accounts. And we're going to scroll down to my big yellow warning. So if you have a GL account and the posting type, which you see in the card for the account, either balance sheet or profit and loss, if this is wrong and you close your year and you end up with a P&L account with a balance brought forward, or what should be a P&L account with a balance brought forward, or a balance sheet account that went to retained earnings, undoing that after the fact is much more complicated than scrubbing your GL accounts before you close, just to be super sure. There's no utility that knows what you meant for it to be. So really, the way to do that, you just got to do it with a smart list. Run it through two sets of eyes if you have to. Just go into just plain old accounts, and we're going to go in here and we're going to bump the number to make sure that we have enough. I mean, if you have a lot of inactive accounts, you could probably whittle it down, but I say take them all, put them in Excel. Take a pass through this list, look for outliers, look for a sudden profit and loss account right in the middle of your balance sheet accounts, and vice versa. For example, if that catches my eye, I would want to stop and look at that and make sure that that's really what I meant, like these two. Have somebody else go back and give it an eyeball and just look at, just completely ignoring the first two columns, look at the posting type and the category. Look for something that doesn't make sense. Like, go through this 2 or 3 different ways if you can. It really is like it's a pain to go back, and it's a pain when you don't find out for like 2 months. You had something go to the wrong place, and we have to reopen the year. But we don't reopen the year. There's a bunch of steps. They're very meticulous. You have to do them exactly right. It really needs to be done by somebody who's got a feel for what went wrong, because there's a journal entry that has to be done to repair it. It's not really something you can call us and say, hey, fix that, but we don't necessarily have your instincts for your GL. It's going to take even longer if we do it. So I just really strongly scrub, double check. And really, you could do this, 4 or 5 times a year, just to make sure that any new accounts that got added, all went in the way you expected. It's totally worth taking the time to check this data before you close. But if you do find out 10 minutes later, 2 months later, there is a knowledge base article that has all the steps in it, and we can work on it with you to get all that switched back to what it should be. Typical balance is not going to blow anything up, but you want to monitor that as well when you go through. Before you close, you do need to, we talked about setting up the fiscal periods for the year. And I'll scroll back here to, there is close the sales tax periods. I said you may not be using taxes at all out of GP, you may be using a third-party product. I like to go ahead and do this just so that it is closed in case for whatever reason you decide to start doing it. At least your years have been broken down into year after year after year. And it really is, there's not much to it. You don't even have to print the report if you don't want to. I'll close my smart list. Oh, it's under company, that's why. Tools, routines, company. Tax year end close. Close year. I'll print the report. I don't even think there'll be anything on it. Ah, there we go. Print this off to PDF, save it, and that way your tax year gets closed every year, whether you need it to or not. So now you've triple checked your posting types. And you have set up your fiscal periods for the new year. And then you close, and there's really, you just want to make sure that your retained earnings account is correct. And certainly you can go straight to the card. It's going to be hard to miss if this is not retained earnings. There's also, you can hit the detail arrow, and again, it's retained earnings. You know, your one question is, do you have more than one retained earnings account? Have you changed retained earnings accounts? Is this no longer the account that you intend to use? As long as what you see here is what you intend, and you have made a backup. This is the really big one. Like, even if you didn't make them in between inventory and payables and receivables, you've got that all nice and closed. You don't want to do it again. The GL close does crash sometimes, and you have to stop. You have to stop and roll back. You cannot keep going forward. With a broken close, you cannot let users back in to enter transactions. There will be consequences if you did that, and actually getting it to close later will be difficult to impossible, and might have to get Microsoft involved. So do a backup before the GL close, if nothing else. It's so much easier to roll back than to try to fix a problem. Remove unused segment numbers really does remove unused segment numbers, and I generally tell people not to do that unless your system really is set up that is an expectation at the end of the year, and that really does mean if you have a segment that wasn't used, it'll be removed. And I don't know why anyone would want to do that. You have an option here to set a starting journal entry, and this field makes people feel like they're supposed to change this number for some reason. I can tell you that your auditors probably do not want you changing this number. This is 3449 because the last journal entry in this system was 3448, and so it is simply telling you what the next journal entry number is. I guess you might have a reason that you wanted to bump that to something, but it doesn't make a lot of sense, and I can tell you your auditor's not going to like it. So I say leave it at whatever it says. Confirm that the year you are closing is the year that is showing up in this box. I say do not remove unused segment numbers. I've never closed my system, so there is no last closing date. I click close year. Sometimes you get this warning that a single-use batch or quick journal transaction has not been posted yet. Do you want to continue closing? all that is telling me is that, hey, you have an unposted GL transaction of some sort. And it's the 15th of January, so of course I have some unposted. That is my reminder. All right, I'm going to cancel, and if I cancel, it just takes me back to this window. I don't lose what I might have changed there. I'm just going to go to my batches. I'm going to double check that everybody posted everything they were supposed to for the year. So I'm going to check all these, and I'm going to see, they're new, they're for 2015. I'm fine, it's safe. I'm not doing anything wrong. It's going to tell me again, hey, you got to open, yeah, I know. And then you'll see that last closing date gets updated. Here come your reports. And what you're going to get in the year-end closing report is basically a recap of whatever just happened. And you'll see I have multi-currency, so you'll see transactions for every currency that there was a transaction in. Basically, you get what just happened on every account. And that you may want to print and save, or put to a PDF and save, sorry. And so what has happened simultaneous to me closing is that I want journal entry inquiry. And this, you do not have to post this. It posts itself, the journal entry that brings the balances forward. You would be able to print this, keep it for your records, confirm that it's all correct. You'll see the source document is BBF. That's the only time that you have a BBF source document. In fact, you can't zoom on it. It means balance brought forward. The batch ID is closed, and the reference is balance brought forward, like you can't miss what this journal entry was for. And I think what you also see here is that those are balance brought forward. And then, if, let's do this, and where's my retained earnings account? It's easier just to scroll. So here's my retained earnings that that were just brought in from the close, and really here I know that because of the journal entry. It's actually, where's my? Here we go. And I think I might have this many specifically because I use multi-currency. And that might actually be everything closing to retained earnings. There we go. So you can confirm what just happened. At this point, you can run a trial balance, and you would have run a trial balance before you closed to compare the difference. I don't know that I would run a detailed. Well, no, I might run a detailed and a summary trial balance. Save those to PDF. Do your close. Trial balance again. Summary and detailed PDF. Compare the two. Those you'll expect to see changes. And that is. That's the end of your close process, except my one recommendation would be that now that you are done and you've looked at your reports and everything is okay, if you are making backups or if your IT department is making backups for you, ask them to go ahead and make a last backup of Dynamics and your production company databases and then put them somewhere where they can be retained. I recommend at least a year. You may have regulatory or procedural requirements that keep them longer than that, I say just put them in a safe place in a folder that says post 2012 close, retain 1 year, or whatever your retention policy is. Put your backups in the folder. That way, if there's ever a need to do research, there's ever a question, forensic question, you have those backups. You can say, when I closed 2012, this was the situation. And if we had to, we would not restore those. We would never restore those over your production databases unless something really horrible happened. But we could certainly restore them to a test server so that reports could be rerun, so that research could be done. There's a number of good reasons to do that. Sometimes you're required. But in any case, I say do it if you can. And that's even something worth storing off-site, just for catastrophic rebuilding purposes. If you're using Payroll, I don't generally walk through the Payroll close in this session. If you have questions about Payroll close, I'd be happy to walk through it with you. It is just like the others. There's a window and you say close it, and it really all you do is create the year-end wage file. There is a little bit of a, you want to make sure that you're timing right on your Payroll close. There is, at the end of every year, there is both a, and this here says install the year-end update, but really there are 2 year-end updates with Payroll. One of them is a tax table for the very end of the year that you're closing. And then there is also every year a code update, like the sort of update like a service pack that you install on the server, and then you have to install on all workstations in order for everyone to be on the same version. So even if the other users are not Payroll users, everybody has to have that update. There is also the tax table update, which simply takes place on the server. It takes 2 minutes to update the table. Non-destructive, doesn't affect the users. That step you want to do, usually you want to do the year-end tax table update just before your last payroll run, but then there is the year-end the year-end code update, which you do after the final payroll of the year. And then immediately there is a tax table update. Again, that's the small fast update for the new year's taxes, everything that went into effect 1/1, etc. And if you are a Payroll user, this year is even more frantic than usual. There was the original round 1 2013 tax table update available at the end of the year. Another tax table update came out last Friday because of the fiscal cliff changes. So you want to get that installed before you do another payroll run. If you have questions about that, I'm going to put up the number for customer care at the end, and they will be able to tell you if there's more to it. This year-end wage file is actually your W-2 table. It creates the table that you will print for your W-2s. I think most places who use W-2s end up using some sort of third-party service to do that, but this information is in here if you want to be able to do it, and there is an edit window to be able to make those edits. So, let's see, I'm going to do Payroll here. That is the end of my guide, and that is the end of my webinar. And so, I'm going to try to unmute the phone, and that may not work. If it does not, please, if you have questions, go ahead and put them in the link window. And I'm going to flip my slideshow back on to how you will contact customer care if you want to get a hold of them with any questions that you have after the fact. But I'm going to hang out for a few minutes, and hang on. Okay. Start. Okay, so you guys can shout out now if you want to, or you can hit me up in the link. Or you can email us if you have questions. So I'm going to hang out for a couple of minutes just in case anybody has anything they want to ask. And for the rest of you, thank you so much for joining me today, and have a great day.